Hello, YouTube, it's your boy, the Crazy Trader, and I'm here again with your favorite stock review. Like I always say, it's get money, don't make no money, and you always got to risk it to get the biscuit. Guys, I'm looking at Robinhood Ventures Fund right now, and I kind of have a feeling that this thing is trading like a penny stock because it's crazy. It will go up 10%, it will come down 10%, it will go up 20, 30%. It's crazy because the way on the daily is trading so volatile, you might think this thing is like a penny stock. And just look at this. It went up 10.8% today. With after hours, we're looking at 12%. So it did go up 12% today. And that wasn't even the full time high. You see, it was at 52 somewhere, 52.99. Let's say 53. That was 16%. This thing, which is supposed to be a $25 introductory stock into private markets, it's going crazy. It's going berserk. And like I said, if I look at the value, look at this. We have the net asset value over here, which says 25.31. That is the net asset value. So trading 50 to 50, that's like 100% over the net asset value. Am I mad at about that? No, I'm not. I wish it goes up to 200. Why? Because I hold some of it. Because I'm biased towards this stock because I hold a few of it. I wish I had bought more. But look at this, 97%. I made 97%, almost 100% by just putting a few thousands in this stock, and I'm up almost 100%. I can sell it. I can I can sell some of it and take the 4,000, take the profit, and put it in something else. The risk is worth it. But why is this thing just trading up and up and up? And I've actually pointed that out in my previous videos about what I think is going on, because a lot of this fund managers are not going to risk their money and throw it into private markets. So this is the best fund to have, which is investing into private markets. Like this fund is invested into OpenAI. This fund is invested into Stripe. If you know anything about these companies, these are big, huge companies. Stripe is in fintech, great company. I believe you use Stripe without even knowing it. Um, OpenAI, which is one of the big talk of town, this fund is in it, and there's going to be a Robinhood Ventures Fund 2. So this is Fund 1. And Fund 1 is doing actually amazing. It has actually produced like 100% in the past 3 months. So Fund 2 is going to be definitely almost the same footprints as Fund 1. But what I heard is this is what they are trying to do. Okay, they are trying to get Fund 2 into actual startups, not some of these companies that they invested in are already like established, like OpenAI, like Stripe. These are companies that are bringing billions of dollars. But the Fund 2, I don't know how true that is, but what I read from the article says they want to go into start like brand new startups where they start from the beginning, and because that would bring more value at the end of the chapter of the company, which is when the company starts to IPO. It will bring more value. Why would it bring more value? Because if you start right now, OpenAI just has raised about, let's say, $40 billion or 50 or 60 billion. I'm just giving you a presumptuous number. I don't know how much they've raised, but even if they've raised $100 billion, they are valued as like 1.2 trillion dollars. That's like 10x of what they've raised. So if you were part of the first people who invested into OpenAI, oh, you've 10x your money. So that's pretty good. So I think that's what they want to do with the Robinhood Ventures Fund too. But you should know that it takes time. It takes years, 5, 6, 7, 8, 9, 10 years for startups to come to be successful enough to IPO, and it's very risky too. So it's up to you to go into that. But let's talk about the fun one, okay? And one thing that I want to point out before I leave for you guys, is we've talked about this before, and I keep looking at it most of the times, which is the Robinhood Ventures Fund institutional holdings, the institutions that are buying this. And like I said, why you want? I'm wondering, why are they buying this? Yes, this is more risk averse than actually investing into a private market, okay? Because this is like an ETF for private market. So this is more risk averse. So the last time we checked this, okay, so the first time we checked this, we had just 8 holders, right? Just 8 of them, eight institutions holding. The second time we checked it, we had 13. Now we have 21. You can see this going up gradually. And I'm telling you, when institutional ownership gets to 50%, this stock is gone. And yes, it's getting there. You could see the increase little by little. Just Go here and you can see all, look at the changes, all new buyers, everybody's new, all these guys new buyers, everybody new buyers. See, Teachers Retirement Fund of Texas, all these people, LMR Partners, Tiger Global Management, Orlando Properties, all these people are new buyers. You can see it. And then you have the Jane Street, and I think this is one of the main reason why it went all the way to like 70 something. When Jane Street started buying it, I'm sure people started flagging it like, oh, Jane Street is buying, so people started flooding into it. And then later on, they realized that okay, it could be just a one-time buy, and so it went all the way to 70 something, and now it's managing itself at around the 50s. It was around 40s in the morning, and now it's all 50. So this is what you can do. Okay, if you have enough shares, if you have about 200 shares of this, and you bought 200 at IPO, you can sell 50 and wait for it to go down and buy, because it's actually being very volatile and swinging. 73, 52, 62. So if you had some and you had sold, or if you had sold at 73, you could have bought at 52, sold at 62. I mean, I'm not saying you can time it perfectly, but I'm saying even if you sold at 70, you could have bought at 50, let's say 54, and sold at 62, another 52 right here, 50. Like you can buy and sell if you want to. You can trade this like a penny stock. Mind you, at least leave like 100 shares, leave a substantial amount, that when it takes off, you are not fully out of it. Okay, you can still trade it. And I'm actually thinking about it. Maybe I'll leave 100, no, 150 shares, and then out of those, the 24 shares that I have on top, I might start trading it like a penny stock. But it depends on how I feel, and it depends on how the market reacts. Okay, so that's what I am personally going to do. But I'm going to watch how the market reacts first before I do it. Anyways, this is just to give you a little slight information about RVI for all those people who follow me, and those who don't follow me. Hit the like button, follow me, just support the page. Let's talk about RVR, and I have a few more stocks that I want to talk to you about. Anyway, stay blessed, and peace.